everyone. Welcome to another KE Report webinar. I'm your host, Corey Fleck. This webinar is produced in conjunction with Focus Communications. Thank you all for tuning in. This webinar, I am featuring, again, Trigon Metals. I featured them early in April for a webinar talking about how the company was moving into production at the Combat Mine in Namibia. Now we get to talk about being in production. Commercial production was declared on May 23rd. The company just released 2025 guidance. That was June 13th. We're going to be covering it all as I am joined by Jed Richardson, CEO and Executive Chairman at Trigon Metals, and Renee Morkel, President and Chief Operating Officer. Trigon is traded on the TSX Venture Exchange under the symbol TM, on the OTCQB under the symbol PNTZF, and on the Frankfurt Exchange under the symbol TZU2. Now, the company has put together a presentation which we will walk through. You will have the opportunity to ask questions live throughout this webinar. We already have a couple questions that are saved up, but please use the question and answer feature or the chat feature within this webinar software. That's how I will keep up to date on all the questions, and I'll interject some of them as the guys move through this presentation. So again, everyone, thank you for joining us. There will be a replay available of this webinar if you do need to step out or if you miss any points. Jed, thank you very much for taking some time to update us on production at the Combat Mine. I'll let you take it away.
Thanks, Corey. So we're back at it again. We've definitely moved the project forward. I think in our last sit down, we talked a lot about our feasibility study. We had open pit production, but we've moved into the underground, and with the underground, grades gone up, metal production's gone up, and profitability, I'd argue, has gone up as well. I'm joined by the man on the ground, Renee Morkel. Renee's our President and Chief Operating Officer, and he's on site 5 days a week. He's on site right now. It's nighttime in Namibia, but still in the office working hard. First, I wanted to talk a little bit about copper. I know if you're on the line, you're probably already a copper bull, but this is something I think is going to be a big feature for us as a company, and has been really the let's call it the thesis behind what we've been doing at Trigon. Is yes, we need a lot more copper for electric vehicles. We need a lot more copper for new infrastructure, because grids need to be updated all around the world. We'll probably need a lot more copper for bullet casings if our world leaders get their way. But where that copper is coming from is a really important part of this story. Historically, through my entire career, new copper production came from the Andes, came from Peru, came from Chile, even big mines in Argentina. Those mines are now old. Those countries are now harder and harder to build projects in. And where we are as globally is we need more and more copper production coming from Africa. And that's exactly what's happening. However, there's difficult places to operate in Africa, which Rennie knows really well. And there's fantastic and great places to be operating in Africa. And we'd argue Namibia would be right at the top of that list. So if you're looking for ways to invest in copper production, yes, you should be invested in copper production, but also where you are invested is going to be an important part of that. And I think Namibia really stands out as one of the better places to be, even in comparison to places like the United States and Canada. So So where that leads us is we're still a small market capitalization, but things are starting to pick up. So market cap right now, like as the last trade, is closer to around 50 million Canadian dollars. We're trading about $1, I think it's $1.15 per share. And the share price is starting to pick up, but we have a long way to go as far as value. And we draw your attention to some of the analyst reports. We've got a target from Beacon Securities of $3 a share, so almost a 200% return from where we are today, and then Atrium at $3.50 a share. So a lot of return, and I'd argue that those target prices only look at the very base level of production. So without us growing beyond the current about 12 million pounds of copper annually, and we'll be growing to a lot more than that over the next little while. So stay tuned is what I normally say, but just there's a lot of value here, and this is a great, I'd argue, a great story in a great jurisdiction in the right commodity. It's the type of place where you want to be invested. Okay. So just a bit of a refresh for those of you who are familiar with the company. We got into operation by restarting a mine that was built by Gold Fields. It operated for over 45 years, had 12.5 million tons of ore mined here at 2.6% copper. We still have 13.5 million tons of ore at around 2% copper with a lot of exploration upside. But most importantly, we are in production. So we just recently put out guidance on our production, and we'll show, and I'll have Rennie talk about that in the next slide. But before we get into that, I wanted to show some images from around the mine. Our open pit, which we've been mining in the open pit from actually May of last year, where we started our strip. We got the mill going, the processing plant in August. We hit commercial production from the open pit in September and started shipping ore. And really at Rennie's behest, we pushed forward on our underground mining and started underground mining in February, with commercial production being declared in early May. Then I want to draw your attention to the picture in the bottom right-hand corner there. That's our concentrate. We're producing 12.5, just over 12 tons per day of copper in con, being shipped out to port regularly. This is the product. This is what's going to smelters, and this is what we're selling. Rennie, why don't you talk a little bit about how we see production this quarter and through the balance of the year?
Thank you very much, Ed. And maybe to touch on it as well, it's been extremely exciting on site, especially successes that we've been able to achieve with underground, which has afforded us opportunity to put guidance out. Our guidance for the first quarter of the year is underground mining between 52,000 tons to 55,000 tons at a 1.9 to 2.15% grade, processing 67,000 to 71,000 tons, producing 1,000 tons of copper to 1,150 at a cash cost of $3.35 to $2.75. So a lot of focus on underground going to the full year, and this is where the incremental step-up comes, mining between 250,000 tons to 280,000 tons of ore from underground at a 1.95 to 2.3% grade, processing for guidance of 260,000 to 312,000 tons, producing 5,500 tons of copper to 6,100 tons. with very good C1 cost of between $3.15 to $2.80. So going to be a bumpy year, and we're looking forward to it.
Great. Often have to remind people that we are March 31st year end. So yes, we are in Q1 of 2025. So this is this year's production. This is not looking forward into the next calendar year. And that the quarter that we're looking at right there, that is the quarter we're in right now. We'll be reporting that quarter in August. And I think that's going to end up being a really important catalyst for us as a company, when the market can see what we're able to generate from this mine at Combat. Now, I've had some questions about expansion, and this is something that we're focused in on. It's something that we did move towards the end of this year, that we would start spending on that, and that is really to manage our cash. We didn't want to be in a position where we were forced to go out for extra capital, but we moved the mill expansion to start spending on that towards the end of this year, once we've had an opportunity to build some cash reserves, and also with the benefit of a working capital facility that we're currently working on right now, and hope to have an announcement in the coming weeks and months. But we will see the impact of that going into our next operating year, so fiscal 2026. But really, that's mainly calendar 2025, where production doubles, going up to 26 million pounds of copper production. At 20, where we are right now, if we were to say a $4 copper price, we're looking at 2025, let's say EBITDA approximating operating cash flow. So EBITDA of 8 to 10 million US. But in 2020, so in next year, we're looking for that to grow to closer to 35 million US if we were looking at a $4 copper price. Where things get really exciting for you as a shareholder is with the contribution of Ases Far West. And actually, the rest of our presentation, we're going to be looking more at the growth that we've got ahead of us, and Ases Far West is the biggest piece of that growth. We're looking in our fiscal 2027, so 2 years from now, producing upwards of 60 to 65 million pounds of copper at a sub $2 a pound operating costs, and that would approximate an EBITDA in the area of 120 million US. And I'll put that in context. We have a market cap of 50 million Canadian. So 120 million US is more than three times our current capitalization. So I don't think 1/3 of EBITDA of go forward EBITDA is a multiple that many people would use to value a company. I think it states that we're very undervalued, and that's the opportunity that you have as a shareholder.
Jed, let's just keep it here for a second, because if we're going to talk about growth, let's talk about some of the questions right now. When it comes to that expansion timeline, as you mentioned, that it sounds like you're moving forward a little bit. Do you have a cost in mind, ballpark at least, how much it will cost?
Yeah, for the doubling of production, that's a mill expansion that we've costed at just under 7 million, 6.8 million US for that. That is just expanding our grinding capacity. We have already sized the rest of the mill and the operation for that doubling. So we're underway on that. We're expecting to start spending on that towards the end of this year.
Okay, what's the general time that you're going to need for that mill expansion?
We want that to be contributing in May of next year. Funny, it's already ready.
Okay,
Good.
that's quick. That's a quick turnaround then.
Yeah, I'm laughing because I've just called Rennie the name of the mine manager. But
couple other questions in terms of that revenue forecast. Somebody sent in a question that they're estimating cash from operations for the current fiscal year, roughly 18 million. Dive a bit more into your number. I believe it was around that 8 million number that you mentioned.
I use $4 copper. So yeah, I'm seeing the question, and I think John's calculation is pretty good. Because today I'm sitting at 440. We've already spent some of the year at 4 up as high as 513. If we hang in at the higher copper price, then yeah, the 18 million is a good number.
Okay. Would you consider mining with a lower cutoff grade due to these higher copper prices? Is that even an option?
Our restriction is the capacity of our mill. So actually, even though we're looking at higher copper prices, we would be more biased to putting more high grade material through, because that allows us to produce more pounds of copper. And we've seen our operating costs are very sensitive to grade as well. So despite higher copper prices, that might impact the go forward resource. But because right now we're constrained on capacity at the mill side, like it makes more sense to put the higher grade material through.
Okay.
Going down.
That makes sense. Kind of touching on the last slide, somebody would just ask, what throughput are you confident to deliver consistently? It doesn't have a time frame on this, but I'm assuming current kind of through the end of the year, even this fiscal year for you.
So the mill capacity, like 100% capacity, would be 1,000 tons per day. And then we would look, with our cycle of what do you call it, maintenance and the rest, and so 800 tons per day would be a good a number we can confidently put for throughput each day. But that's already factored into the forecast that Rennie talked about in the last slide.
Okay. Last question then on this, just dealing with that copper production chart here, that forecast for fiscal year 2027, is that including ases Far West and ases West?
Absolutely, yeah.
Any additional ore bodies in there?
No, that's just ases Far West. So to kind of put that in context, so I talked about our mill being about 1,000 tons per day of capacity. From the underground at ases West, we can do about 1,000 tons per day. From the underground at ases Far West, we can do 2,000 tons per day. So that's where the real growth comes from, is ases Far West.
Okay, let's move on then. Let's talk about the growth.
Sure. So this is a familiar slide for those of you who've been following the story. What I wanted to point out here is in the two panels on the right-hand side, we have shaft 1 and shaft 3. Around shaft 3 is where we've been doing most of the open pit mining, but we do have some underground that we anticipate will we'll start mining in that area over really the next few months. Shaft 1, in the upper levels of Shaft 1, that's where we're mining currently, and we're mining between level 1 and level 4. So that's actually still very much in the upper reaches of the mine. What is notable here is in that 13.5 million tons of 2% copper material, almost all of that is contained in those two panels, in the two panels to the right. The ases far west, the shaft on the left side of the page, that's the growth that we've talked about. And I often want to reiterate that shaft exists. It is in place. It was a $90 million project to sink that shaft in 2007. It would probably cost us in the area of $150 million if we wanted to do it now. It's one of the largest head frames in Namibia, and it was actually never operated from. So it sits there as an opportunity for us. Now, the area in and around that shaft, we know the mineralization continues, but it's not yet in resource. So job one, when we get into that area, is actually drilling out the resource and building the mine plan around it. But there's a lot of confidence that we have in doing so because there's a lot of drilling that's happened in that area. And I'll highlight that. So this diagram in the upper right-hand corner, that's what it looks like at shaft bottom for that ases far west shaft. So there's a little bit of mine development that's already occurred, and some drilling that occurred from the underground before the mine closed in 2007. You can see some examples: 6 meters, 3.56% copper; 10 meters at 4.5% copper; 8 meters at 6.1% copper. There's a lot of really good high-grade material that we're eager to get our hands on and into the mill. That's in and around the shaft. Below that, I have some examples of drill holes drilled from surface into the structure around ases far west, and this shows another 2.1 kilometers of mineralized strike. And examples of that are 5 meters at 15.6% copper, 325.6 grams per ton silver, and then 2 kilometers in the other direction, and there's holes all the way in between these, 13 meters at 2% copper. So we have kind of at hand a lot of mineralization we need to bring into resource, but we already have the infrastructure in place to bring it into production as well. And that's the growth that I really want people to be focused on here.
So how much drilling do you think it'll take to bring it into resource, and what's the consistency you've seen from tying together these holes?
So we expect it to be very similar to what we've got at ases west. So in the underground, and we have a 45-year history there, so some good confidence. So it's lens-like mineralization. It does appear to be higher grade as we are deeper. As far as meters, I don't have a meterage number that we need to put it into resource, but we have estimated it'll cost us about $12.5 million drilling that area out. That is a big part of the cost that we forecast for bringing us as far west into production.
Okay. What about dewatering the shaft?
So notably, there's actually a lot less water in the area of ases far west compared to the main mine. So our hydrogeologic reports show a ingress rate of about 1,200 1,250 cubic meters per hour in the area of ases west. By comparison, ases far west has an ingress of 80. So it's a lot drier. We would have to dewater it, but it would be like a 3 to 5 week job dewatering ases far west.
Okay, thank you.
Okay, and then beyond ases far west and the existing resource, we control 35 kilometers along this belt here. All of the red stars you're seeing on the map are copper in outcrop. Notably, in April, we put out some results in the extreme east end of the property where we drilled 7 meters, 3.5% copper with 43 grams per ton silver. A second hole intercepted 3 meters at 2% copper, 35 gram per ton silver. All of this very close to surface, but it really debunks any thought that this is just a single occurrence or a potentially small resource. There's potential for us to have, open pit and underground resources all along this 35-kilometer belt, feeding the central mill at Combat.
So when do you start testing some of this stuff then? If there's this many targets, how does that fall into the timeline?
So we've got we've got a program right now where we're doing like auger drilling along the entire belt. We're doing geophysics along the entire belt, and we're just to prioritize targets with a view by the end of the year we'll be back drilling from surface. Like right now, of course, the drilling is going to be focused on the underground because that's what's going to be quickest to add to our mine plan and into reserve and resource. But by the end of the year, we want to be back drilling at surface, looking at these targets.
One other quick question that just came in regarding the potential here. The Sprott Silver Stream, I believe it is. Do they have claim over any new discoveries over this 35-kilometer trend?
So yes, so they do have the Sprott streaming is over the entire project. It doesn't cover anything else that we're doing, but it does include the exploration. But I'll note, and this is why it was very important when we put together that deal, that we had an ability to buy back part of the stream. So we've got at a flat price, we can buy back half of the stream for $28.1 million up until 2027. And that is agnostic to silver moving. So if silver price doubles or triples, it's going to be the same cost for us to buy back half of that stream. And it was with that view that we knew there was still a lot of upside to what we were doing.
Okay. Yeah, if you're cash flowing, might as well buy that back. But first things first.
Exactly. So, in that 2027 forecast year, we're looking at EBITDA in the area of $120 million, and that is calendar 2026. So we should have more than enough money to buy back that stream.
There's no time restriction on buying that back, right?
Oh, no, we've got to buy it back by June 2027.
Okay, there you go. Perfect. Thank you. Okay.
Beyond that, we've got exploration ground on what's called the Kalahari Belt. The Kalahari Belt, I'd say, is probably one of the most exciting copper exploration addresses globally. So this hosts the mega deposits that you see in Congo, and then comes from undercover, comes up in Botswana. We just had in November the sale of the Khoemacau project for 1.9 billion, and then we have Sandfire. That's the red on the Botswana side, and then in yellow, Sandfire has a discovery there as well, and they also enjoy a market capitalization of around $2 billion US as well. We are the shaded blue on the Namibian side of the border. We'd have the second largest land package on the belt in Namibia, second to Rio Tinto in the shaded green. We'll be working on this in the background, so we're doing geophysics right now. But this geology has produced some mega projects, and that's what we'll be looking for. So whether it is the second project for Trigon, or it ends up being the project that makes us interesting for a major takeover, it's a bit of a lottery ticket that we're working on in the background. And we'll as there's updates, you'll just look out for the Kalahari project. I think it'll be I think it's a bit of a sleeper project in the portfolio.
So we don't have any budgets on that, or really exploration timelines.
So it's an earn-in that we've got. It's 1.1 million that we need to spend over 2 years. So we'll spend more than that in the next little while. Right now it's just geophysics that we're doing, but at the tail end of this year, we should have some we should have some targets, and we may do some drilling.
Would you bother bringing in a partner or a joint venture?
I think it's a little early for that. The timeline for Kalahari, I think, lines up well with the cash flow from combat, right? But by the time we need to do an aggressive program at Kalahari, we should be comfortably cash flowing in a way to fund that project ourselves. And that way, as a shareholder, you can get the full benefit of the project without needing to dilute the project with a joint venture or additional capital raises.
Okay. Seems like everyone just wants it all at once. Hey, Jed, everyone wants you to explore here, mine here, and grow there.
Yep. It's like, 200% return to target price is not enough.
Yeah, well, one step at a time. That's fine. Thank you.
Exactly. Okay. And this is more of a reminder. So in April, shareholders voted to spin out our Moroccan assets. If you are a shareholder of record, for every 2 shares that you have of Trigon, you will get 1 share of Safi Silver. We have a kind of a pre-money valuation of 25 cents for those shares, and I think it'll be a nice little bonus for shareholders who hold at that time. We're looking for that data record and for kind of the launch of Safi Silver towards the end of August. So we're working on that right now. But a nice little bonus feature for Trigon shareholders. Okay, so a lot of good catalysts, a lot of reasons that you should be interested in what we're doing. A few things to look out for. We're working on that working capital facility. I think that'll be a nice strong sign to the market. We have the quarter that we're looking to announce in August, which I think is going to be a key milestone as well. And then there's the Safi Silver spin out as another piece. So it should be a good next few months for us as a company, with lots of reasons to participate.
Okay. There's a lot of questions that we can get to. Go through the board of directors and management first.
So here, actually, I don't know. We can talk a little bit about it. The key thing is Rennie's involvement. I think as we get into the questions, I can already see some of the questions. She'll be answering a bunch of those.
Yeah, there's a lot. We've answered a lot of them already, though.
So yeah, why don't we go straight into questions? We don't need to.
Let's do it.
About ourselves.
Okay. Let's start off with some of the ones that came in early on. This is a bit more of a technical question, but how much copper concentrate is kept in inventory, unsold, on average, and is this a factor to get working capital financing?
Do you want to talk about that, Rennie?
It's not more than 2 days or 3 days worth of production. We ship as we produce, and the stock levels on some mine site is at a minimum.
Okay.
But yeah, what I think the question's getting at there is also kind of where security might be coming from, and what we're working on shouldn't require any additional security.
Okay. Now, in terms of Ases West and the open pit, the profits that you're getting there, if they are reinvested in that Ases Far West development, are they then exempt from that 37.5% tax?
Exempt.
I
guess if you churn it over within the year and you
investing.
Yeah.
Do you have enough?
You'll get a wear and tear allowance against the expenditure for income tax purposes, but not. I think it's split over 3 years, but I'm talking on a correction. So you will still pay taxes on profits.
Okay. The government always wants their money, don't they? We all know that. Now, how does the roadmap look to achieving that $2 cash cost or under $2 cash costs as per the Ases West study? Is it feasible, or has inflation bumped that up a little bit?
Sorry. So it's really yes. No, it's really just where the ore is coming from, right? So as we mine more from underground, the operating costs go down. It's grade dependent. So because we're seeing higher grades, we are expecting lower operating costs. There's some scale benefit as we get larger, but mainly it's grade that's driving the cost lower. And just translating from Rennie's wear and tear allowance is increased depreciation for everybody. So yes, as we spend, we can depreciate relatively aggressively because we have these big these capital expenditures on Ases Far West. Yeah.
Okay, that makes sense. To this cost question too, can you break up the components of other costs within the cash costs? It was in the recent company presentation, I believe. It shows $1.78 in 2025. What variable costs are in there?
Okay. So what we're talking about is like mining costs versus processing costs plus site overhead and other additional costs is kind of the way we've presented it. There we go. So what we have here is mine costs and then processing. Sorry, I'm showing here. Here we go with that whiteboard that I didn't want to use here.
Yeah, there you go. You knew you'd have to pull it out.
There you go. So here's the mine cost. This one is interesting here because we still have a relatively high contribution of the open pit in this year, and a big component, big part of that cost is like our mining cost is actually a lot lower underground, and you see that impact. Processing cost stays similar, but then you do have the impact of grade here because the grade increases. You see the impact of the processing costs. Now these variable costs, these are actually a large part of that is our refining and treatment charges, right? So as our concentrate grade goes up, then these costs come down. Shipping charges per ton of con, that's a big component in there. There's on-site G&A as well in this number, and that comes down really just on a factor of the amount of production. So that ends up being relatively fixed costs for that as we produce more, well, we're displacing that cost over more pounds of copper. Now, going back to what the actual question was, like variable versus fixed.
Yeah.
I don't know, Rennie, do you?
Not on the top of my head, but
yeah.
As we progress in 2022 and 2028, it's normally an 80-20 split. Especially larger size plant. Bear in mind that with a small plant that we have now, or a 30,000 capacity plant, your overhead cost and your fixed costs won't grow in proportion with the doubling and tripling of production.
Right.
So we have a large proportion of fixed costs now that will dilute with higher throughput going forward.
That's all I can kind of point to is that like you see this outsized cost there, and it's just because it's defrayed over. There's a large fixed cost component, particularly to that $1.78 point.
Okay. I think that addresses it. Look, I think so much just comes down to the financials when they come out too, each quarter, just showing how many of these costs move around, how much they move around, and a lot of it obviously depends on how much is being mined. Let's go back to, where's that question? Once the funding is in place for that mill expansion, what's the sequence of events that need to happen either for that funding? It sounds like generating cash flow and maybe bringing in some sort of credit, but what are the sequence of events that get you through that mill expansion?
Do you want to walk us through that, Rennie?
Sure. As part of the feasibility study, we've already identified a preferential supplier. The specifications as well as high-level drawings have been set up, so we don't need to go and do a full feed study. The crushing circuit's already set up for treating 60,000 tons. It takes roughly between 9 months to 12 months for the entire purchase to delivery and construction. We will run concurrently the purchasing, which will take roughly 6 months to 9 months, and the construction of the infrastructure and the base for the mills at the same time, as well as any development that's required on the conveying section as well. So it's a fairly simplistic upgrade, but it will take between 9 and 12 months purely because of the lead time associated with the mill manufacturing and shipping and delivery.
Okay. And then on top of that, it is, well, simply getting the money in, making sure you have the funds to do that. Question here. What is the limiting factor for increasing underground production at Ases West? You talked about mill capacity, that being a factor, but for example, the listener wants to know, is it mining stopes? Is it head frame capacity? Is it mining equipment? Or is it simply just mill capacity?
Yeah. You want to talk to that?
Our mining fleet, come this August, we will take receipt of the last outstanding piece of equipment, is sized to mine 30,000 tons per month from the underground. And it's purely the scaling of what our mill throughput capacity is. Going beyond that and trying to stress the asset or trying to mine more up to 60,000, Traffic management would become a bit more problematic, but we do have the head frame that we can upgrade. But in the current plans, we've limited to 30,000. Understanding the Ases Far West shaft will take that up potentially to 90,000. Ases Far West, as Jed said, has a hoisting capacity of 70,000 tons, 60,000 tons of ore and 10,000 tons of waste per month.
Yeah. Okay. I think that addresses it. Thank you. Since we're on this slide, straightforward question here. How deep are shafts 1 through 3?
You want to speak
They
to
look
that?
like a couple hundred meters.
It's 450 to 500 meters shaft bottom for one shaft, 3 shaft, and I believe it's close to 900 meters for Ases Far West.
Okay. In terms of the exploration side of things, do you have an estimate, general ballpark number in terms of drilling cost per meter?
Surface drilling is roughly... Surface drilling in Namibia is typically between 1,500 and 2,100 Namibian dollars a meter. Underground is roughly about 1,000 Namibian dollars. So roughly $85 to $100 and for surface drilling, and about $75 for underground.
That's with assays.
Okay,
yes.
All in, essentially. Look, I think we should address this one question here where somebody's pointing out, or they think that cash is a constraining factor for Trigon. They're asking, would you sell part of any of the other assets to raise funds for this development? But I feel like, at least going through this presentation, cash doesn't seem to be a constraining factor, especially from the fact that you should be generating some pretty good free cash flow. So, Jed, can you just address this general concept of cash, whether it is a constraining factor or not for Trigon?
So, as it stands right now, we do need to build cash for the mill expansion, but that's something that we have sight lines to over the next 2 or 3 months. We're not in a situation where we need to start selling assets to fund that. We can sell copper. But then going forward to develop like the rest of the growth profile, I think there's still a lot of options that we have. Like I could point this to the shareholder here. We do not have any debt, right? Like that is we're in an enviable position that way, with a strongly cash flowing operation next year and development to do on the Ases Far West. That it likely be we would look to debt before we would look to sell assets. So yeah, no, we don't. I don't see a scenario where we would be selling, yeah, particularly like Kalahari, which we're like, there's still so much value to unlock there before it makes any sense to even engage in conversations about sale.
Well, and quite frankly, once you're cash flowing, debt should become at least a little bit cheaper for you. Not saying that debt is cheap, but once you can show profitability, that should at least ease up any capital constraints. Have you looked at any other acquisitions in the area, adding either resources, prospective land, or are you pretty much good with what you have?
Right now, we need to execute on what we've got, but always looking.
Okay. That's fair. Couple more questions. Everyone, thanks for sending in all these questions. These webinars are way more fun when we can have these conversations and address your questions more directly. The last couple questions we're going to go on is that the spin out, the silver company spin out here. How did you come up with the value of that spin out, and any investors identified already that might provide cash to that company. Give us a little bit more information on really just that spin out, the cash component.
Yeah, so the value is that $5 million is close to the value of what we've spent there. It also was a value where we were trying to minimize any kind of tax impact for the shareholders who are going to be receiving this as a dividend. So yeah, our expectation is that it's going to ultimately trade at a much higher valuation, but kind of sticking a pin of the value at that level is for that to minimize the tax impact. As far as investors, we've actually received a lot of interest in the Safi Silver spinout. I think there's a lot of excitement has been generated in Morocco by the success of Ida Gold and Silver. We've got our Silver Hill project is in close proximity to their Boumadine project. The Adana project that we have has has a pretty amazing looking geologic signature. There's a number of silver companies that are would be interested in getting a toehold into Morocco. There's silver primary resources are hard to come by. There's only a few jurisdictions, with Mexico and Peru being the ones that probably come to mind first, and then maybe Idaho. But Morocco is one of those geologic provinces that hasn't been well explored, and the land package and first mover advantage that Trigon has and has put into Safi Silver is very attractive.
Okay. Hey, Jed, thank you very much. Renee, thank you as well. That was very interesting going through this. And hey, it's fun. You guys are in production. I'm sure we'll be having more of these webinars following up on some of the financial results too. And I think that's one thing that some of the comments that we have here, what's going to get the stock moving, where are the shareholders coming in from? Once you start releasing financials, then that can bring in some other investors as well. It's a process out here. And I know you know that way too well, Jed, after restarting this mine and now with the whole new focus on the growth coming sooner rather than later. So everyone, thank you for tuning in. You can email me any further questions. My email address is fleck, FLECK, @kereport.com. I'll follow up with Jed, get some of those questions answered, and I'm sure we'll be having another webinar in a few months. So everyone, thanks for tuning in. Jed, Renee, thank you very much for all your time today.
Thanks, Corey.
Thank you, Corey. Keep well.